Perhaps one of the easiest ways to contemplate SR&ED overhead is to consider a company that's 100% SR&ED focused. In other words, a company whose sole focus is developing new products or processes, and all of their activities focus on SR&ED related activities. In such a case, what you would do is you would take the total expenses of the company that were incurred in Canada, and then realize that the Income Tax Act denies the eligibility of certain types of expenses, what we call specified adjustments. If you look at the bottom of page 8 and 8 of your handout material, we have a list of those adjustments. The first wave is what are called prescribed expenses. Those are expenses that are denied under Regulation 2902 of the Income Tax Act. They include legal and audit fees. So basically any fees paid to a lawyer or an accountant often get caught. Any interest or bank charges, meals and entertainment expenses, management bonuses, amortization of assets, because you claim the assets separately. Any administrative salaries other than to the extent that they can be allocated to the SR&ED on a reasonable basis. They talk about interest expenses, conference and convention fees, dues, fees, or fines or penalties. So that would be the first wave of total expenses where we pull all of those types of expenses out and do not allocate any of them to SR&ED. The next wave of expenses that get pulled out are those that are denied under Section 37 of the Act. That's the definition of SR&ED itself. The first of those are any materials that are not consumed in the SR&ED process. In other words, materials that were used as part of the process but ultimately got sold and for which we recovered our money. The other big expense that gets caught here is rent for a building. So if we rent a building or have a leasehold interest in a building, that expense is pulled out. Any expenses for sales or marketing type advertising expenses gets pulled out. So there's often some judgment involved on whether something's a sale or marketing expense or whether we're actually getting detailed enough where we're calculating or amassing data that's used in the SR&ED analysis. So there's a cutoff between what's a sales or marketing expense versus perhaps a sales or marketing type employee who begins amassing technical data that's very relevant to an ongoing SR&ED process or feedback on a prototype of that respect. Okay? Any non-depreciable assets, so land, something along that nature that doesn't depreciate, even if it's used 100% for SR&ED purposes, would not be eligible. That cost would be pulled out. And lastly, any rights that we purchase. So if we purchase a patent or a right for something that we may develop into a further SR&ED product or process, we still don't get the initial cost for purchasing that right because the person who did the SR&ED would hopefully have claimed it had it been done in Canada. Okay? Once we get those total expenses less these prescribed adjustments, we have what's left over, the base for allocating SR&ED expenses. So there would be left on that the expenses that we've allocated directly, wages, materials, subcontractors. What would be left over is our overhead allocation base, of which we would take a reasonable percentage. In our case, where we have a 100% SR&ED company, we would claim 100% of that. In fact, in any case where we have a 90% or more, all or substantially all SR&ED company, meaning 90% or more of its total costs are aimed at SR&ED related efforts, we can claim 100% of those costs. In any other case, if the company we would say we could substantiate was 62% SR&ED focused versus commercial focused, we would claim 62% of those base costs. Okay, page N7 of your handouts gives a nice summary of the difference between the traditional method of overhead allocation and the proxy method. Basically, under the proxy method, what we do is we calculate a notional amount, which is roughly equal to 65% of the SR&ED wages, the wages of the employees incurred in Canada that we've claimed, as an estimate of the overhead related to the Canadian SR&ED activities that we'll earn credit on. Now, if we use this method, then basically the method that we use to collect and record direct wages is relatively similar. We talked a little bit about the differences in section F, or the labor section of this course. The overhead allocation basis is, on traditional, we have to use some reasonable basis of allocating the overhead, or on the proxy method, we take roughly that 65%. Most other expenditures are recorded the same, And the real issue on what types of overhead expenditures are provided or would be eligible for SR&ED credit are provided in the guide itself. Some of the things that they illustrate are office supplies, administrative staff, or reasonable portions thereof, maintenance of equipment, property taxes, cost to maintain things in general, and a reasonable portion of administrative or overhead expenses. A reasonable portion would mean if we can estimate that 8% of our total company activities or costs are aimed at SR&ED activities, then 8% of the shipping and maintenance and administrative staff would therefore be eligible.